Hello and welcome. Thank you. Welcome everybody to the how-to series of webinars for the Manningham Business Network. Welcome to everybody who's joined us. With this webinar, we will have the chat box open. So if you have any questions of Christine, feel free to type your questions in there. We're not sure whether we'll be able to answer them through the course of the webinar. However, we will get back to you shortly after the webinar with your questions to make sure that everyone's followed up. I would like to introduce to you Christine Williams from Smarter Property Investing. She's kicking us off today with our webinar series. It's the webinar series on business recovery and growth. As I said, it's in collaboration with the Vic Government and Manningham Business Network. It's designed to engage, reinvigorate and collaborate with business owners in Manningham to make sure that we are building a stronger base and a stronger future for ourselves as business owners in the area. Christine, I'll hand it over to you. If you can take us down the road to how to invest in a secure future, that will be awesome.
So how to, invest and have a safe, security future. I'm going to have a disclaimer here. Of course, what you would like to know is that I am a property strategist, and this disclaimer is about information only. There is going to be no individual information given because I don't know anyone's personal circumstances, but the information is around some figures and what you can do. And of course, if you are going to take this further, I encourage you to speak to your either financial advisor, accountant, legal representative, and so forth. So here we go. So a little bit about me. Who am I and what do I do? Well, I'm a property strategist and I've been in the industry for well over 12 years, but I've been personally investing myself for well over 30 years. I write for various magazines, either online or hard copy magazines. I'm interviewed by the Financial Review quite often. I do hold my accreditation as a property advisor, speak on radio, been interviewed many times on different radio stations and so forth. I do hold my real estate licence in 3 states, Victoria, New South Wales and Queensland. And of course, I'm really pleased to think that I was voted one of the top 10 property advisors in Australia 2018. Bendigo Bank in collaboration. I've been speaking for Bendigo Bank for well over 9 years to their customers as well. But why are we here today? Well, I have a question for you. Why do we work? Okay. Why do we work? Most people work and they go into business for lifestyle, family, income, their future. Why do you work? And then how long would you like to work? Are you in business for the next 5, 10, 20, 30 years? You need to ask yourself this question because you may have gone into business because you're really good at what you do and you felt that you could offer this product and or service to enjoy lifestyle instead of working 9 to 5 for somebody else, or have the flexibility in life. But whilst you're working, we need to understand that if you're a director or a principal of a company, legislation tells us that we do not individually have to put away for super. And we may think that our business is going to be our super. Now, there are people out there who are watching today that, may be putting their directorship 9.5, 10, eventually 12% in super. Or there may be other people out there that are really focusing on putting cash back into the business to build their business. And that's okay. But what I'd like to talk to you today is that at the same time, we need to be securing our financial future as well, because we just don't know what's around the corner. And I'm going to help you work through that. So one of the things that we need to understand is I work very strong with figures. And I work with figures around what does the ABS tell us about who we are, what statistic we fall under, and what can we do about becoming financially independent. And we've got some really weird numbers here. The ABS are telling us that 63% of us, regardless of owning our own business, may end up on the government welfare when we retire. 26% of us are going to meet St. Peter and, unfortunately that's it. 5% of us are going to work for the rest of our lives. Now, double-edged sword here. We're in business and we generally go in business because we love what we're doing. So that 5% could be you have to keep on working because for whatever reason you haven't secured your retirement, or you're a part of that 5% that want to keep on working, okay? So guys, I'm 63 and I'm really happy about what I do. And so I don't really have that retirement number, age number in context. However, I believe that I'm financially independent. So I'm also part of the 4%. And then of course, 2% ABS tell us 2% of our population are wealthy. Now, wealthy to me is let's get on the QE2 and let's just, cruise around the world for the rest of our lives. Financially independent to me means that whatever I do today in my current life, whether or not that be family shopping, gifts, grandchildren, travel, whatever I love doing, I get to do on my own terms and I don't have to worry about where the money's coming from. So that's just to give you an indication about where these numbers come from and the ABS statistics. So as a director or head of your business or a solopreneur, entrepreneur, what are you doing to secure the rest of your financial future? And what does that actually look like to you? So as I said, my figures are coming from the ABS, but the ABS have given us a figure. The ABS are telling us that in today's world, in today's dollar, that if you decide to retire and you own your own home, you still need $60,000 per annum. Now, this is going to sound really ridiculous because, you may be in business, achieving the 60,000, net profit, or you could be achieving more, 100,000, 200,000, whatever it is. But to go further in this webinar, it's just to explain where I sort of have this bottom line, this baseline. And the ABS are telling us 60,000 per annum if you own your own home, which of course is a lot different when we come to think about what the age pension is. So you may go along with your business and, for whatever reason, you've decided to, finish your business or sell your business or whatever life circumstances comes and hit you. The pension today for a couple is 34,000 or just over 23,000 for a single. So we're nowhere near that 60,000. So we need to think about how can we get it to the 60,000 if that's what we, are going to live on, or how much do we really want to live on in retirement? And how can we make your magic figure happen? How much do you really want? Because if we listen to the ABS and if we believe that we're going to, whatever reason, sell our business, finish our business at retirement of 65, and we know that the ABS are telling us again that, we're going to live until we're 85, 90, men and women. And if it was 60,000 that we were going to live on, we would need 1.5 million in unencumbered assets by the time we retire. Now, if you are putting super away and you are in business, 10, 20, 25, 30 years, perhaps you get to that point and that would be okay if you're putting the money away. As I said, legislation dictates that we don't have to as a director or a principal or a sole trader, or you may be doing it anyway. But this is just to give you the figures to really understand where I'm coming from when I start talking about figures, okay? So how much do you want? And now I'd like to ask you, what would $100 a week buy you? So let's think about $100 a week. Let's just think about $100 a week, 52 weeks a year, 5,200, 10 years, 52,000, 20 years, 104,000. If you actually banked $100 a week, whether or not that go into your super, and of course it went into super, it would be compounding, but if you banked $100 a week, for the next 20 years, you'd end up with 104,000. A long way short of 1.5 million if 60,000 is your figure. So I'd like to ask you, can your business afford to put $100 a week away to contribute to your financial future? What does $100 a week buy you currently if you say that you can, but we may be thinking about where we're parking that 100. So $100 a week could be, lunches every day if you're in the office or, out on the tools or doing whatever you're doing or what a type of business that you've got. It could be your lunches. It could be a dinner a week. It could be coffees. It could be that's your spending money for the week. But can your business afford another $100 a week if you so choose to? And if you did pop it into super, that's fantastic. But there are other ways, there are other strategies. And I'd like you to think about, can your business afford $100 a week? Or can it not afford $100 a week, depending on how long you want to be in business? And are you getting secure for your financial future? When we talk about business, and perhaps we may have a capital expense, and perhaps we go to the bank and we say, please, sir, can I have some more? And we're going to think about our borrowing capacity. And of course, we have to, submit 2 years of our financials in business, and different banks have different policies and what they expect and so forth. And you'll be thinking about, well, I've got business expenses, I know I'm having net profits, I'm providing all the figures and everything, and, I currently have my own home mortgage. I may have a lease on equipment or a car or something like that. You may be contributing to super as well. But those figures from a business perspective, from a business owner, go into the bank and they look at everything. They put you under a microscope. It is much harder for a business owner to get a loan than it is if you have an employee. You have an employee, you know that you're paying them weekly, fortnightly or monthly, and they just need to provide, 2 or 3 of their pay slips and all their other expenses. But as a business owner, we have to provide everything. We have to basically undress for the lender, the broker, whoever that may be. And one of the things I keep coming across is that we have opportunities hereby in business whereby we try to work out our cash flow, and we try to, if we need things, pay for things at a different time. We try to really look at our cash flow under a microscope, and we may take up opportunities like Afterpay or Zip Pay or 12 months interest free or 5 years interest free with Harvey Norman or whatever. But as much as they're becoming a business expense and you know that they're tax deductible, they're actually still a debt, and those things will affect your borrowing capacity if you choose to borrow. It was just something I'd like you to think about before you sign on the dotted line and think, well, that's going to be great cash flow because I don't have to pay it off until whenever, or I've got 12 months interest free. But of course, if you're going to borrow money, it's still a debt and it is taken into consideration. No different to a car loan, no different to credit cards. But people think that these facilities aren't exposed to a bank or when perhaps you want to borrow money, and they are. So it was really just a little bit of a tip there to make sure that you understand and know how that may affect your income and your borrowing capacity. So really, what can $100 a week buy you? Well, I'd like you to, this is recorded and I'm not going to read this word for word, but basically this was an exercise I did with Bendigo Bank myself, and we talked about how much money you could borrow, and we physically came up with some figures, and we looked at, are we going to borrow money to invest? And we're going to borrow money to invest in property, because I can tell you with my property portfolio, it just ticks along in the background. And by the time as a business, I have business expenses, I do my tax deductions, and I get the tax deductions on my property portfolio, I can assure you that purchasing property is very different to paying off your own home mortgage, okay? And what we're looking at here is that you can go through this slide yourself later when you perhaps, rewatch the recording, is that we're basically saying that you can borrow money, but for $50 a week, you could perhaps have an investment property as well as paying your own home loan. Or for $100 a week, you may end up having 2 investment properties. So it's all got to do with your borrowing capacity, your family income, the income coming into your family household, less all the expenses. And that includes business expenses as well. So it's more about understanding that I believe that investing in property, as well as super, as well as cash in the bank, as well as having shares, investing in property can be a strategy that you can combine within your business to really secure your financial future. So it's really about understanding where perhaps that $50 or $100 a week could go to eventually impact with a major positive impact in the next 10, 15 or 20 years. And maybe at $100 a week, once you've got your business up and running and once your cash flow is there, you may not miss that $100 a week, but it's bubbling along at a great return in the background. The 3 T's. This is something that I talk about, and as a business owner, I know you love to know that your business has business tax deductions, and this is fantastic to know. It's really good to go down to Officeworks and know that when you're buying office supplies for your business, that it's tax deductible. Unfortunately, the kids' school books and things, they aren't. But isn't it really great to know that there are things because of your business and you're a business owner that are tax deductible? And I can assure you that this is one of my major strategies, the 3 T's when it comes to investing in property to help secure my future. And the 3 T's are the tenant. The tenant actually pays anywhere between 85 and 95% of my mortgages. And then we've actually got the taxman who contributes anywhere between 10 and 15% again. Now, when it comes to tax and being in business, You may be on an annual BAS return, or you may be on a monthly BAS return, or you may be on a quarterly BAS return. Me personally, I'm on a quarterly BAS return. Did you know, as a property investor, I can actually do my investment properties tax returns and tax deductions through my BAS? And this is something that, as a business owner, you may or may not have known. And if not, I suggest you have a conversation with your accountant. If you did know, but you didn't know that you weren't doing it, and you wanted to actually reduce some of the heartache of your cash flow, I suggest you have a conversation with your accountant to make sure that your tax deductions with investment properties, which helps your cash flow, you could do that through your BAS. And wouldn't it be really great to have, your BAS that you had to contribute to, but you had an investment property or a couple investment properties, in my case, multiple investment properties, to reduce my BAS return regardless, added with all your business expenses as well. So, of course, the property themselves you're in an entity that you choose. It may be in your individual name, or it may be in a trust, or it may be in a company. And that's totally great. But when you're doing your BAS, including your individual tax return, you could do it all together. So I strongly advise that you speak to your accountant about this and or your financial planner to make sure that it helps your cash flow. Because we all know in business that cash flow is king. We know that we've got a product and service out there, and we know that money's coming in, but we also know that money's going out. So if we can make sure that our cash flow is balanced whilst we're contributing to our financial future, and it's made easier and we can do it through our BAS, why not? And the next T is time. Okay, we all know that we're in business because we've decided, as I said, lifestyle, family income. But time, to me, when it comes to investing in property, is one of the magic keys to the formula. It's very good to understand that you need to time the market when you want to get in. You've got to get in at the right time. But time in the market is 10 times as important and as magical as investing in itself, because it's time that actually helps compound everything. So I hope you can understand why the 3 T's are very important to me. The tenant, of course, I can teach everybody how to get the right tenant. And during COVID, I can honestly say none of my clients that are landlords have had any issues because of the precursor and risk mitigation I put in place around tenants in the first place. And of course, working with your accountant and either doing your tax. If you're an employee with your own business, you can do a tax variation, or doing it through your BAS. Speak to your accountant, and then, of course, waiting on time. But, of course, we all know that in business, something happens. There's always going to be something that goes wrong. And, it could be, unfortunately, a disgruntled client. They just didn't understand what was happening. It could be that, a client, unfortunately, cannot pay you. It could be that equipment broke down. It could be, numerous things. It could be, you have employees and they've been sick and you've had to bring in extra staff. There are bumps in the road. So when we think about going into business, you may have put in place what we call a capital cash bucket, or a cash buffer for your business. And it can be classed as a capital expense in the fact that you've borrowed money to have as a buffer. And that you've probably put in place for your business, okay? But when we're talking about investing in property, it's the same thing. Investing in property to me is just like running a business. So you have your business that you're running, you understand cash coming in, expenses going out, you have your business strategies, you have your marketing, you're acquiring clients, you're doing a forecast, weekly, monthly, annually forecast about what the business is going to be doing. But investing in property to me is no different. So I actually technically have a side hustle, and the side hustle is my investment property portfolio. But I also have to run it as a business, and by running it as a business, I have a cash bucket in place if something goes wrong. So let's talk about some of the things that could go wrong. It could be that perhaps we don't have a tenant. Hands up, I've been very comfortable about that. But it could be that we may not have a tenant. And during COVID, it's actually taught us that this is something that could happen at any time. Or it could be that maintenance is required on a property. Or it could be, for whatever reason, your personal expenses came all in at the same time, your own mortgage, your own rates, private school fees, a business expense, and all of a sudden your cash flow starts to be depleted. So once again, if we think about investing in property as a business, a side hustle, a second business, we would have a cash buffer for something that goes wrong. Now, a cash buffer is something that I teach my clients to come up with a figure that they're comfortable with. And I hope this tip here that I give to you helps you understand where you can, or how you can come up with that figure. Because the figure is everybody's individual figure. It's not my figure. You know, some people say you need 3 months expenses. Some people say you just need 3 months mortgage repayments. Some people say, you know, if you're going to have a tenant, you know, if you don't have a tenant for 12 weeks, you need that. Well, it's a combination of everything around there. And to me, cash buffer should be really equated from a fear or concern into something very tangible. And I suppose, as you can tell by now, I'm a numbers girl and I just like numbers, okay? So the scenario I'm going to give you here is if we're thinking about investing in property, and if you think that you're going to not have a tenant perhaps for 12 weeks and you're getting $500 a week, well, that's $6,000. If you think for whatever reason cash flow is going to be an issue within your business and you may not have any, you know, funds coming in for, you know, a month or something, and perhaps in that month you were taking anywhere between, I don't know, $2,000 a week, $4,000 a month, $5,000 a month, or whatever you were taking out of business for your lifestyle expenses, you might say 3 months, and that could be anywhere between, as I said, $10,000, $20,000 or maybe $30,000. So all of a sudden we're sort of talking $36,000, and then of course, you know, landlord insurance, a couple of $1,000. So your cash buffer for your investment property portfolio might be around $30,000. Your business may experience the same sort of things about, you know, bumps in the road when it comes to cash flow, and you need some sort of cash buffer. So the tip here is think about what really could go wrong and think about how you could fix it and what you need for that, and write those concerns down and those fears down, and then equate it to a dollar figure, and that's going to be your cash buffer. And that's the tip for anything that you do. It's not just about investing in property. It could be for your business. It could be just for your home household expenses, but use it that way. Whatever concern you have, equate it to a dollar figure, and all of a sudden it becomes very real and very attainable. So we've talked about investing in property, and I talked about, you know, the right time in the market, and the media is going gangbuster at the moment. Of course, here we are, you know, March 2021, and the media is going gangbuster and property is in boom. Well, apart from the fact that 18 months ago, I was telling people that this was going to happen even before I even experienced COVID, and we had pre-COVID and now we're during COVID, there's a cycle, and most people say that there's about a 10-year cycle in property. And yeah, yes and no, it depends on where you are, what state, what suburb, as to what that's going to be. But it's been 17 years, it's been physically 17 years since the entire of Australia has needed some sort of boost, okay? And what we've got government spending massively throughout Australia, but we've also got major private infrastructure happening as well. So think about COVID. There have been so many incredible possibilities that have happened, so many major positive things that have happened during COVID, because we've had to rethink, reevaluate, and reset what we're doing in business. Of course, there's been some negative things, but on the whole, the economists 12 months ago that said we we're going to have a, you know, 10, 15, if not 20% unemployment rate, it hasn't happened. In actual fact, we're actually employing more people. We're being very lucky at the moment because our bank rates are so low, interest rates are so low, but that's global. So it's not just COVID, it was happening before COVID. And then, of course, we talk about private infrastructure, and private infrastructure is definitely going up as well. So the right time in market, yes, it's definitely now, but we've still got to understand where and what to buy, even though it's the right time. But yes, 18 months ago, I said we were about to enter into a boom. And what is happening is exactly what I expected to happen. Excuse me. But it actually has happened. It surpassed my expectations. So here's my formula, the research system. So we understand that, excuse me, I have to have a drink. We understand that as an investor, whether or not we're in business, to be in business, or a property investor, we expect capital growth and we expect good cash flow. But how do we get it? Well, here's the PIES formula. We need to understand that we need value for money. We need a property that's around transport. A really good design. Is it going to be easy to sell? Quality, amenities, and of course, really good return on rent. Excuse me. And then, of course, we need to understand the basic four. The basic four are population and demographics. A population can move from migration from suburb to suburb, migration from state to state. And then, of course, we need to understand economics and employment. What is that? Is it private employment? Is it government employment? What's happening there? Where does employment come from? Is it retail? Is it hospitality? Is it aviation? Is it all the things that we've been worried about? Is it essential services? So we need to think about that. But infrastructure spending is one of the biggest things that we talk about. And at the moment, as I said, our governments around Australia in our states and territories are really going gangbuster with government infrastructure. And some people have always said, follow the infrastructure trail. Well, it's not really as simple as that because there's two levels of infrastructure. I've just explained government and we can see around us, the roadworks, everything that's happening around us at the moment is just incredible. But private infrastructure is another key to investing in property. Because when we think about the type of property that we want in the area that we want our tenants to have access to everything we expect. As a homeowner, we expect to be close to schools, shops, hospitals, transport. So why wouldn't our tenants expect that? And if we give that access to those facilities to our tenants, we know that we're going to get a really good return on investment. We need them to be close to their employment. But getting back to private infrastructure, the biggest key there, I can only tell you from a visual perspective, is if there's a McDonald's going up, you know that there's people coming. If you heard the saying, build it and they will come. If there are supermarkets, if there's a petrol station, Coles, Woolworths, Aldi, McDonald's, and the next biggest one is Bunnings. So they are private infrastructure. And for those large organisations putting in their companies, their employees, they understand that there are lots of people around in that area. And it actually just snowballs. So government infrastructure is great. Private infrastructure is just important. And of course, with all of that becomes employment. And then, of course, supply and demand is the next one. Supply and demand will give us the return on investment. Whilst an area is in undersupply, and REIB tell us that if an area is in undersupply, it means that there's less than 2% of rental properties available at any particular time in that area, and it's in undersupply. And as a landlord, when it's in undersupply, you actually get generally a better rent, a better return on investment. If it's in oversupply, it's generally 3% of rental properties are available. And as a landlord, you may have to put down the rent to make sure that your property is tenanted. But the next little tip there is, if you've got a property that is definitely close to all the amenities that I've spoken about, and it's a very livable property, it's really easy for someone just to bring their furniture and clothes in and enjoy the property that you're offering for accommodation, as in rentals, you're going to get the right tenants. So to make sure that you get the major part of my pie, my grandma's pie recipe, make sure that you do population, infrastructure, employment, supply and demand, and then understand that we have the micros inside about getting the right rent, value for money, transport, amenities, design, and you will get capital growth and cash flow. They may not happen together at once, but eventually they will. And the expectation there, and I've proven it time and time, is anywhere between 3 and 5 years, and they come together. And then if you've got your property portfolio that is bringing you positive cash flow, well, of course, that's a part of your future. Not only is it going up in capital growth, but it's a part of your cash flow as well. I love this saying, and this saying is start by doing what's necessary, then do what's possible, and suddenly you're doing the impossible. Now, as business owners, you may not have heard of that saying before, but let's face it, it's very true, isn't it? You decided to go into business because you believed that you were the right person to offer the product and or service that you're offering. You're the right person to have empathy. You're the right person to give what your, potential clients have. You've got rungs on the board. Yes, there's going to be, bumps in the road. Yes, there's going to be sleepless nights. Yes, there's going to be fantastic days. And, yes, everything's going to happen. But if you actually start doing what's necessary, truly the impossible will happen. And we do know that because we're doing what we want to do. We love what we're doing, and that's why we're in business. So to really sort of close off here, I'm going to leave you with, one final question, and that is, for what you're doing in your own business and you're so completely happy about it, and you may have thought that I didn't really know that I was starting a business, or I'm so glad that I've started a business. You've only just started the journey of what was possible, and you're definitely on your way to what's impossible. And my final question is, so what can you do with $100 a week? Is it to have the cash, to put the cash flow into your business to help build your business? Or is it something that you can eventually put away now for the next 5, 10, 20, or even 30 years that you're in business to surpass the $60,000 per annum? Is it your figure? Is it 60, 75, 100, 150, $200,000 per annum? The number that you want to live on in retirement is entirely up to you. It's your number, nobody else's number. But for as little as $100 a week, I can honestly assure you that you can achieve more than the 1.5 million, 2 million, 3 million in the time frame that you have by investing in property. It is a strategy that I am very happy to say that has worked amazingly for my clients and just amazingly for myself as well. I've taught my family, my children, my friends, and it's what I'm offering to you. And with the offer to you is that after this, we'll be organising a link for a copy to the 10-year commitment, and you can listen to all these strategies, read the book, and really work through what you can do with $100 a week. So for those of you that are contributing to your super, that is fantastic, and I'm really, really happy for you. But perhaps you may think that this could be a second strategy as well, because this happens to be, my side hustle that I'm really happy about. For those of you that may have questions, they will be definitely answered in the book if you download the digital copy when the email goes out, or you're very welcome to contact me. So thank you very much to the City of Manningham. I really hope that I've shared some insights and tips, and you've taken away at least 3 things about tenant, taxman and time, cash flow, a cash buffer, and one last thing. In life, we go to make decisions, and that decision could be, do we go into business? Do we go into a relationship? Do we get married? Do we go and buy that car? Do we get a caravan? Do we make that holiday? And the final gift that I'm giving you is that you must enjoy the 3-night sleep test. For whatever decision you're about to make, if you can't sleep for the next 3 nights because you're really stressed and it's just not working, your gut is telling you that it's not the right thing. But if you can't sleep for the next 3 nights because you're just so excited and it's just so something that you want to do, your gut is telling you it's right. I have enjoyed my 3-night sleep test for many, many, many years, and it was a very, very wise person that told me this, my mother actually. So yes, your 3 takeaways: invest for the future, enjoy your life, cash buffer, tenant, taxman and time, and 3-night sleep test. Thank you.
Fantastic. Thank you, Christine. You packed so much into that time. It's amazing. So thank you, everybody, for being a part of this webinar. It's going to be uploaded shortly to the website. And as Christine said, there'll also be a link there to download her book so you can have more information of what she's been speaking about. This video is there as a replay. And if you're watching it as a replay, right next to the link there, you will see the download as well. So if you have any questions, please get in touch with Christine, get in touch with Manningham Business Network. We would love to follow you up with whatever question you have and make sure that you've got everything covered in knowing how to invest for a secure future. Christine, once again, thank you so much. Thank you for your generosity of your time and of your information and the difference that you're making to the Manningham area. It's greatly appreciated. Thank you very much.
You're welcome.
Thank you, everybody, for being a part of the webinar, and we'll see you at the next one.